Good morning and welcome to today's webinar from East Capital Group. My name is Marcus Rågmark and I'm a part of the sales team at East Capital. I'm joined today by Emre Akcakmak, our head of Frontier Markets, as well as Alexander Gyllenberg, senior analyst. Welcome to you both.
Thank you.
We will spend the next 20 minutes or so covering the strong performance of our Global Frontier Markets Fund that recently celebrated 10 years of existence. We'll also remind our viewers of the investment case for frontier markets and also look into 2025 and how the fund is positioned. Starting off then with you, Emre, as a relatively smaller asset class with a large set of diverse countries, frontier markets tends to be somewhat overlooked by some of the global investors. However, when we look at the data, performance really stands out. So what were some of the star performers for 2024?
Yeah, it's been 10 long years and many cycles. I think when we launched the strategy back in December 2014, it was the time of the first time we had Russia-Ukraine tensions. Oil price was coming down sharply. A lot of issues were surfacing in many of these markets. But I think time has been healing a lot of these macro imbalances, especially after COVID. We had quite nice economic rebalancing stories in many of our markets. And they have been making the headlines for the wrong reasons, maybe during the earlier years. But lately, they have been on a roll. If you look at second half of 2023, it was the turning time for these markets to perform, because after many years of pressure with COVID, Pakistan, for instance, that was the best performing market in the second half of last year, of 2023, for that matter, and one of best markets in 2024, but they were near default situation in the middle of 2023, for instance, due to all these pressures. When you look at all these markets, I think the point to make here is that the momentum started accumulating in the second half of 23, and starting from that, they have been performing phenomenally. If you look at the best performers of 2024, most of these markets are among our frontier or small emerging markets, and we are not talking about 10-20% type of returns. We are talking about 30-40-50% returns in US dollar terms. So it's been a good period over the last few years, on top of some challenging early periods.
Thanks a lot for highlighting that, Emre. And as I mentioned briefly during the introduction, and you as well, December marked a decade since we launched this fund, and you've been managing it since inception and successfully so. And I know you have a few slides to illustrate how the fund has been performing relative to its benchmark, but also other benchmarks such as emerging markets.
Yeah, it's been a good run. I think what makes me happy is that we were able to keep our promises. We never promised, of course, anything in terms of returns, but in terms of return profile and what we were trying to do, we were trying to deliver better returns compared to Frontier Markets Index, which is our benchmark index. We were trying to deliver hopefully better returns compared to Emerging Markets Index as well, and trying to provide an alternative to emerging markets investing to investors, by making frontier markets part of their emerging markets basket, but an uncorrelated part of it. So returns have been good. And in 10 years, we had 9 out of 10 years with positive alpha. And this alpha has been pretty consistent. And as a style, we never targeted to make a killing, so to say, in 1 year, big alpha, and next year to be followed by a very bad performance. We like to change our views. We like to invest in different opportunities. We like to invest depending on different market conditions. And this is what has been happening over the years. And if you look at comparisons with other indices, when you have a look at, absolute returns in 10 years time in excess of 100% in US dollar terms, but this number has been accelerating. 2024 return was 24%. 2023 return was also 24% in US dollar terms. 3 year, 5 years, it's been quite good performance. When you also look at relative returns compared to Frontier Index, it's been 14%, and compared to emerging markets, 16% outperformance. But what's quite interesting here is that we were able to outperform even developed markets over the last 1 to 3 years, and we are head-to-head with developed markets even, and everyone is talking about NVIDIAs and chips and so on. But with stock picking, we were able to deliver this kind of good return. So this is a table. These charts are charts that make us happy, and it gives us more reasons to be optimistic going forward as well.
Absolutely, and impressive results, even outperforming developed markets indices, as you mentioned there as well, over some of the time periods. But not only has the performance been solid and strong, but it's also been achieved with a fairly low volatility and standard deviation, hasn't it?
Yeah, that's the side benefit. We don't target, we don't need to think very hard about diversification. I think the big universe gives us a good degree of diversification, even if we don't target that. But that's the outcome, if you compare our strategy to emerging market strategies, and this is all we have been talking about on the road for over 10 years now. It is a very competitive strategy. It's a very competitive universe, and with stock selection, you can generate even better returns. So when we look back now, 3-year, 5-year, 7-year, 10-year rolling periods, we are in top 3% when compared to 500 emerging market strategies in terms of returns, and with lower standard deviations in terms of Sharpe ratio as well, in top 3 to 5%. So that's the outcome of the benefits of investing in this universe. And if we are able to keep the returns at these kind of good levels, I think the investment case would still look quite attractive going forward.
Thanks. So with that, we've covered the sort of high-level performance of the asset class, but also our fund, of course. Another thing that we try to hammer down in all of our client meetings is the investment case for frontier markets. So Emre, let's remind the viewers, please.
The next few slides, maybe some of the viewers and the participants of these webinars in the past will be very familiar with, but that's the beauty of it. Let's keep it a bit boring. What does it mean? It means that the structural reasons to make frontier markets attractive continue as they are. Growth. This slide, I don't think it will change in the foreseeable future. You have better growth prospects of frontier markets coming from a low base, but even in markets that are growing a bit slower, like Slovenia, for instance, growing by 2.5% in euro area, they are offering good returns. When you look at a market like Nigeria growing only by 3%, potential there is more like 5 to 6% if things are improving just a little bit from current levels. So if you look at next 5 years, this is IMF numbers. I think plus minus, we are expecting similar numbers as well. We have the drivers of growth in Asia, but many markets are growing around 4 to 5%. Compared to emerging markets, emerging markets are slowing down. China is a big question mark. So this universe comes out as a good alternative to emerging markets. When you look at standard deviation, this is also something that we always talk about. I think this is one of the most important aspects of investing in frontier markets. You have lower standard deviation, lower volatility in normal times. I'm not talking about times like COVID or global financial crisis, not extreme times, but in normal times, frontier markets deliver lower volatility compared to emerging, but not only that, compared to developed markets as well. And it's been yet another year with lower volatility now in 2024 compared to even developed markets. When you look at correlations, this is the main result. The reason it's not going to change overnight, as we usually talk about. Correlations are very high in developed markets, very high concentration in Europe and the US. Emerging markets are individually volatile, but they have high correlations. That's why you get quite high volatility. But in frontier markets, you don't get high volatility because of very, very low correlations of market returns. And third point is the point that we usually talk about. If you look at the valuation metrics also compared to EMs and DMs, the big discount has been only opening up. This is primarily because of superior earnings growth that we see in frontier markets. But I want to summarize the investment case here. What did we talk about? We talked about growth. We talked about earnings, lower standard deviation. So in 10 years' time, if you take annualized risk, our frontier strategy and also frontier markets index is having more like Japan or Kuwait-like volatility. It is lower standard deviation than it's maybe more like 2 + 2 = 5 type of a situation. If you take the pieces together, you reach this lower standard deviation. And in terms of returns, yes, the US is an outlier, 11% annualized returns over the last 10 years. But our strategy was able to deliver both low standard deviation and high returns. I don't know what happens in the next 10 years, but this is probably the summary of the investment case in frontier markets, which are usually overlooked. And that's why we'll be good. I think in this webinar, we have the opportunity to get questions live as well. So if you have any questions about the investment case or anything on the way, please do interrupt and ask. If not, we'll try to spare a few minutes in the end of it to be able to talk about it, because our biggest worry about or biggest issue talking about frontier markets is typically the lack of good understanding of these markets by many investors. And this is why we are trying to keep up with all these webinars and other types of communication. Back to you, Marcus.
Thank you, Emre. And I can only echo, please do post any questions you have in the top right-hand Q&A function of your screen, and we'll do our best to answer those as best we can. But yes, I agree. The risk-return profile of our frontier market fund here, almost on par with developed markets, I think that is one thing we certainly want all of our viewers to bring away from the session today. So this has been, of course, a bit looking back. If we then try to bring out the crystal ball and look ahead into 2025, what are the key factors and storylines that you and Alex and the rest of the team believe will shape the narrative for frontier markets?
So this is a summary. It's a bit wordy sorry for that, a lot of words here, but I think the summary of the summary is that we can't identify a single factor. So now if you think about the emerging markets, Taiwan is a big issue. It's in the heart of semiconductor ecosystem. So it's going to affect all markets. There could be something like COVID, for instance. Yes, these are black swan events, but there is no single factor, because we get questions all the time and good questions, right questions about oil exposure, tariffs, Trump, currency, but we don't have a single factor. There is always winners. If US dollar is strong, Middle East is there. If US dollar is weak, Asia and Africa would be there. So if we don't have a single factor, which we think will simultaneously affect all frontier markets, that's the beauty of it. So we are looking for another year of growth in majority of these markets. We are looking for another year of continued recovery in the most vulnerable markets that we have been seeing a lot of stress. We are seeing, low volatility, low inflation, central bank rate cuts, and overall resilience in these markets. It's a good year. It was a good year. It's been 2 good years, 3 good years after having seen big rebalancing in many of these markets. And in terms of risk reward, when you think about, okay, is there a downside protection? What's the upside here? It's very favorable because earnings continue to grow and valuations are still at 7.5 times for our strategy, for instance. So it's very, low PEs. I don't want to call it cheap valuations, but PEs are very low. Interest rates are declining, so that should be a very favorable risk-reward profile into the new year and going forward. Risk appetite is there. If you look at spreads over US bonds, spreads aren't large. It looks like normal times. Yes, there is some volatility on the market nowadays, but this is currently limited to the US. Inflation is low. This is yet another perception. we are not talking about very high inflation figures in frontier markets. In terms of currencies, we are investing, it's about 70% of the strategy in pegged currencies. So it's a pretty strong currency profile as well. Let's not forget about strong pegs in the Middle East. Let's not forget about Slovenia, Romania, very stable currencies. But also, if you look at all other currencies that we are investing in, they are now very calm. Everything you see here in the last 3 months, it's single digits. In 1 year, mostly single digits, except for a few very large depreciations, which are not continue in our opinion. And when we look at to the new year, we can't identify any markets which are very good candidates to see major depreciations anymore. We have been talking about Pakistan earlier, maybe Egypt, maybe Nigeria, but not anymore. It's a good year. And in terms
Emre,
of Trump,
if I just jump
see,
in there,
yeah.
maybe we actually received a question here from one of our viewers regarding how oil prices and other commodity prices affect the fund, as well as how a strong dollar affect. I know you touched upon it briefly, but maybe we can just recap.
Yeah, there the point is we have about 30% in the Middle East, maybe 25%. This is clearly good for the Middle East. This is clearly good for Nigeria, Kazakhstan. But again, we are not betting on oil because if oil price goes up, we are happy because our companies will be doing fine in the Middle East, and we'll be changing other companies according to other positions. If oil price is going down to 50, we'll be going more into Asia. So we have the flexibility. But overall, I think lately strong dollar has been adding a lot of value with Saudi Arabia and the UAE, where we have 18% investments collectively, and it's been also helping our banking exposure in Nigeria. The banks there are trading at 1.5 times, not book value, but PE ratio. So you have different pockets of opportunities for every news piece, I would say, except for the big ones such as COVID. Let me put it that way. Similarly, Trump world, Vietnam might be a major beneficiary. It's been the major beneficiary trade deficit to Vietnam, which means Vietnam has been exporting significantly more to the US to replace China. It's been a major beneficiary. FDIs are pouring like big rain in Vietnam, $20 billion a year. It can continue to be a beneficiary. It can continue or it can get a bit hurt, but there's always some opportunity out of every news flow.
Good to hear, and that is indeed the beauty of frontier markets, that you have this diversification and ability to be flexible depending on the market conditions. So with this market backdrop in mind that we see now and that you ran through, how are we positioned in the fund, and where do you see the best opportunities for continued outperformance?
Yeah, so this is the current allocations. It might change tomorrow. We don't have any commitment to any of these markets, so that's how we manage things. But it's a pretty stable strategy. If we had this kind of allocations over the last 6 months, 3 months, 2 years, you would see the big anchors, the similar levels. But I think the point to make about the strategy here is that we are not allocators, we are stock selectors. And even allocation decisions that you see in blue here, these are derivatives of stock selection. It's a technical classification. If you invest in a certain bank, a certain stock in Egypt, it will look like an allocation decision, but this is almost purely driven by stock selection, and performance has been strong accordingly. And the building blocks, maybe I'll leave the word to Alex a little bit to talk about company cases. The building blocks are the same as we have been talking about maybe some months ago or a year ago. Banks with very high ROE, typically more than 20% ROE, so they are compounding their equity at a pace of 20%, paying high dividends, digitalization ongoing everywhere. These markets are main beneficiaries of AIs and all sorts of digitalization trends that we see everywhere in the world. And coming from a lower base, lower technological base as well, they'll be among the best beneficiaries of new technologies. And then you have the core part of the strategy driven by consumers everywhere in the world. Could be grocery retail, could be education, healthcare companies. But maybe I let Alex to talk about a few of our current investments to give you some more color.
Yes, thanks, Emre. I see that our time is running out, but please allow us to have a few more minutes to run briefly through a few companies. And firstly, would like to talk about Saudi Reinsurance. This is the country's leading reinsurance business, and Saudi has in its Vision 2030 articulated an ambition to create this national champion within reinsurance, and their sovereign wealth fund PIF recently took a 23% stake in this business. And when the news of PIF taking a stake started turning a bit more tangible, we took a position in the stock, and it has since moved up more than 100%, far beyond our initial expectations, but a real success story in alpha picking from our side. Maybe it's gotten a bit ahead of itself from fundamentals in the short term, so profit taking could be on the cards here, but a great success story. Next up on the consumer theme, we have a grocery retailer from the Philippines, and this is a quite stable business, often growing at a rate of GDP plus a couple of percentage points, and this is the case with Pure Gold. Gives us exposure to the consumption story in the Philippines, a country with significant structural growth potential. It has a growing middle class, a young population, more than 110 million people, GDP growth of around 6%, and Pure Gold grows ahead of GDP due to also low penetration of modern retail format. So this is also a company that is trading at extremely depressed valuation levels if you compare to peers across the universe, probably the cheapest grocery retailer in all of emerging markets. And we think this gives significant potential on the upside here, and we had a pretty good entry point so far, but we think there's more alpha to collect here. Lastly, we head to the UAE and one of our most sustainable investments, Empower. This is a district cooling company, and the technology used here is basically what we in Sweden would use for heating, but instead of warm water running through pipes, they use cool water in the pipes in the UAE there in Dubai. Company with long inflation hedge contracts, high visibility of cash flows, and also significant growth potential on the back of Dubai being a real success story. And the district cooling is a sort of a pivotal part of Dubai's energy strategy. They want to increase adoption of this technology, and it is more than 50% more energy efficient than the alternative. So a lot of reductions in gas emissions, and this makes the company sort of a key enabler of the UAE's net zero 2050 strategy, as 80% of the household's energy consumption in the UAE is used for cooling. So this is a key technology for them. I think we'll end on a sustainable point there and hand back to Marcus.
Thank you, Alexander, for illustrating those company cases. In the interest of time, unfortunately, I think we could go on much longer, but thank you all for listening in. And I believe these 10 years have really had an exceptional performance, and I think we see good opportunities with the current market conditions, as well as the investment team's experience in navigating these very diverse markets to continue creating good performance for our clients. So with that, thank you for listening in, and don't hesitate to reach out to myself or any of my colleagues on the sales team if you would like to hear more about this asset class. Thank you, Emre and Alexander.